Hello, my name is Andrew Thake from Mines and Money. Delighted to be joined today by Doug Eaton, who's the President and Chief Executive Officer of Strategic Metals. Delighted to have you with us today, Doug.
Thanks very much, Andrew.
Doug, Strategic Metals is a prospective generator company. Can you tell us a little bit about the prospective generator model?
I sure can. Prospect generators are companies that I like to think of us at the bottom of the food chain. We come up with new prospects through research and some exploration activities of our own. Ideally, acquire them as cheaply as possible, and then when the market conditions are right, and we've advanced them somewhat, validated the concepts that we think the exploration concepts we think could be there on the property, then we move them on to other companies who take on the more expensive exploration activities like drilling. Keeps our risk to a minimum, and we structure our deals in a way that gives us lots of blue sky, but also ideally returns the investments that we've made and makes a profit for us.
And Strategic Metals, you're a prospective generator company. What kind of makes you a little bit different to other prospective generator companies out there?
Well, we've been doing it since the early 2000s following this model. And I think we've had pretty good success at it, much more so than many of our peers. During that time, we've been able to build up about $38 to $40 million worth of shares in other companies that we've taken as part of our transactions. Built up a royalty portfolio that currently is 12 NSR royalties owned by the company. It'll grow to 23 here shortly when one deal is completed. Similarly, our share position will also grow when that deal is completed. We still retain a healthy cash balance, about $3.5 million. And over the past 10, 12 years, we've returned about $20 million to our shareholders by way of dividends with what's called a plan of arrangement, where shares in new companies are dividended to the shareholders. So it's been quite a good model, and we continue to grow our portfolio all the time. Right now, we've got about 95 projects that are unassigned to and available for option or sale to other parties. So we're in a very, very healthy position.
So over the next 6 to 18 months, what are the key milestones that investors can expect?
There are a few. Well, first of all, we're going to continue to follow our normal business model, which will be, I think, see more deals announced. We announced 2 last month, and I think we'll announce several more in the next few months. Lots of stuff in the pipeline. But beyond that, we've got shareholdings in a couple of companies, or a few companies that I think really give us exceptional leverage. One is a company called Rockhaven Resources, who are working on a high-grade gold-silver prospect in the Yukon. They're in the midst of preparing a pre-feasibility. I think when that's completed, a lot of uncertainty relating to that project will be gone, and I think there should be a sharp appreciation in the share price. We've got just under 30% of that company. In addition to that, there's another company that's currently a private company right now that's working to secure the rights to a former producer in Yukon. It was once the largest mine in Yukon. About 50% of the ore in that, there was no one in that district, is unmined. It's a very good deal for the company. It's a private company called Proprietary Resources. They're working with the local First Nation as a partner. And if that deal is completed, it will be extremely accretive to the company. We're just waiting for final signatures on that one. And then another company that we've got a significant shareholder in is currently about 12%, but we have warrants that could bring us back to 17, is working on a replacement for Portland cement. It's a cost competitive with traditional cements, but it's got a huge advantage in terms of the environment. It generates about 50 to 70% less CO2 than typical cement generators. The company's name is Terrace CO2. It's still private, but I think it will go public soon. I mention that one because the other major investors in it, who come in at much higher prices than we did, are Breakthrough Energy, a consortium company that's built by Bill Gates and designed to focus on environmentally sensitive projects. technology, that I should say, not projects. And other investors there are Lennox, the big home builder in the States, and Rio Tinto. So we're flying with pretty good company there.
Okay. So in terms of another thing that our people listening to this will be interested in is a little bit about yourself and your background in mining. Can you tell us a little bit about your management experience and how did you come to work for Strategic Metals?
Right. Okay. I started working in Yukon Territories in 1971, and I was with the dominant consulting group in that territory for my entire career. I just retired last year. So, I've spent more than 50 years exploring up there. The company that I ran for many years, Archer Catherine Associates, built up an enormous database which Strategic has access to. So we've been able to mine my own personal knowledge, the knowledge of other members of our exploration team, and that database. And so we're always able to identify what we think are really prospective opportunities, and then go out and stake the ground at very, very low cost, validate the concept if any work is needed, and then move those projects on to other companies, as I said, who will take on the more expensive exploration risks. Typically, when we do a deal, we keep either an NSR and then get a very large share position in the company that's acquiring the ground, or we do option agreements which see large expenditures and leave us with a big equity interest. For example, we did a deal on a porphyry project this past month where the company has to spend $11 million, pay us $500,000 in cash to earn 60%. So they can be pretty good deals for us if we find the right partner.
And in terms of the projects that you're currently involved in, are they all Canadian based, or do you look further afield?
Well, we mostly focus on Yukon, Northern BC, and Northwest Territories, because that's where our knowledge is greatest and our databases are best. But through some of the investments we've made, we have exposures to a number of other jurisdictions. For example, we own a large share position in a company called Silver Range Resources, which is exploring using the same business model in Nevada, Northwest Territories, and Nunavut. And they're expanding into a couple other states in the next few months. So that's one way of doing it. Our share interests in other companies sometimes, we like the management team, but for some reason they move into another jurisdiction. That will give us exposure as well. Precipitate Resources has significant projects in Dominican Republic, and with some sensitivity, geopolitical sensitivity there, shifted their main focus to Newfoundland. So through their efforts, we've got good exposure there. So it's we're a bit of a polyglot. Some people have said that we're a holding company now because of our large royalty position and cash positions, but we're more than either a project joiner or a holding company. We're a little bit of a hybrid.
For those people who are listening and want to check Strategic Metals out, what is your ticker symbol?
We're SMD.V on the Venture Exchange.
Well, Doug, it's been a pleasure having you on Mines and Money TV today. This interview was brought to you in association with Redcloud. We wish you all the best for 2023. That was Doug Eaton, President and Chief Executive Officer of Strategic Metals. Thank you for your time, Doug.
Thank you very much.